former Reagan economist, confidant of Donald Trump, many other powerful players, but by the way, supporter of Bill Clinton, his tax cuts and some of the things he did. So Art calls him as he sees him. Always good to see you, Art. The president is saying, I'm optimistic we're going to get some big numbers. I think he's right about that, but only because the prior numbers are so awful. But how do you see this going out the rest of the year and into next year?
Yeah, well, the thing that surprises me about the president on this, Neil, is that he is accurate, but he's not correct. I mean, we had this huge drop because of COVID, and a lot of the growth that he's touting as the best in 40 years is just the catch-up from opening up after COVID, which is accurate. I mean, he's correct. There's nothing wrong with his numbers. It's just not reflective of what is happening. We're just trying to catch back up to where we were. But one of the things that I think has been missing in all of these discussions is the stock market today is about the highest level it's been relative to GDP. Now, I'm using the S&P 500 relative to GDP than it's been in the entire post-war period. So it's way above where it was, let's say, in 2008. It's some 30–40% higher, relatively speaking. So we have bad policies coming in, and we have a very high stock market, and all of that, to me, bodes ill for the future of the market and the economy.
I'm just wondering, too, if this is really driven at its core, and you and I have talked about this a lot, Art, by COVID.
Yes.
And now a statement out of the CDC raising its warning for those who want to travel to the United Kingdom to a level 4. Apparently that's the highest level. This despite that the Brits are not going through with further restrictions. In fact, they're continuing easing up on them. Some interpreted that as sort of endangering that recovery. But what do you think of that now this is front and center? These spikes in cases, I've been urging viewers to step back and look at the spikes. That's one thing percentage-wise, but overall cases, particularly in this country, are very, very low. And of these new cases and hospitalizations, which are extremely low, fully 99% of them are those who have not been vaccinated. I'm not trying to gloss over them, but I'm wondering if we are overreacting. What do you think?
Yeah, I think we are overreacting. If this is the cause of the market, we are overreacting. We are overreacting with regard to policies as well. You know, it's not just not vaccinated, Neil. There are a lot of those people who have already had it and have antibodies, and there are a large number of them out there as well. So you should have the vaccinated plus those who had it before, which leaves us with a much smaller share of the population that's really unvaccinated and have no antibodies. And that's the key here. And we've done a great job in this country, and Biden, too, has done a great job in extending it and pushing it. And that's great. And I don't think there's any reason why this would be the cause of a market sell-off, and especially a serious sell-off, as this appears to be starting to be. I think we've got way too high prices, and we haven't built in any of the Biden agenda into those numbers. And once we do that, we're never going to catch up again to where we were, number one. And number two, with all this stimulus spending, all these taxes, all this regulation stuff, we're going to have much slower growth going forward. And that just doesn't justify a stock market as high as it is. It just doesn't.
You know, I think it was over the weekend, I hope I got it right, Art, but the Washington Post sort of gave Republicans in aggregate 4 Pinocchios for putting this inflationary spike, particularly oil prices, on the president. I get what they were saying, that, you know, any rebound from a parked car is going to, you know, incite this sort of activity. But they went on to say that 6 months into his presidency, you can't be looking at some of these other spikes. I think they were talking about grocery store prices, pork, chicken, all that, without saying it, on a president who's, you know, only a half a year in office. What do you think of that?
Well, I think 4 Pinocchios is probably a little large for that, but there has been a spike in prices. There has been a spike, and you know, that's there. Now, what they're arguing is these are temporary spikes in prices, which makes some sense. They're coming from the very lows of the original COVID period, where their prices dropped and all of that, so they look large. And if you look at it in interest rates and in gold prices, and if you look at the dollar and the foreign exchanges, there's no sign yet of a major inflationary period. But to say that prices haven't risen or are not rising, or that you're a Pinocchio for saying that, that's ridiculous. I don't know whether inflation's going to hit yet or not, but it's not. To say that these prices have not risen is pretty bad.
Well, I think what they were saying is that this boom isn't on the president. That's what I thought that was a little naive because markets respond in real time to pressures and the markets do the bidding on all of this stuff. So that's what's weird. Could I get you real quickly on if this really continues, Art? The last time we had a serious case of inflation was, of course, the Paul Volcker situation where he would raise interest rates, a full percentage point at a time. And that did the trick. I mean, but it also killed the economy for a while, but it did wipe out inflation. Of course, from there, that combined with Ronald Reagan's tax cuts, I know what you had a big part in, we were off to the races. Are we at that point where if this accelerates, the Fed will have to do something, quit waiting around for this to sort of settle down?
I don't know what the Fed would do to stop this from continuing, Neil. I don't know what the tools are. Now, what Paul Volcker did was he contracted the monetary base, which allowed the money supply to go more slowly. We had, quote unquote, tight money. And with Reagan's tax cuts, we had an increase in the supply of goods and services. And if we have less money and more goods, that's going to start controlling inflation. That's exactly what we did back then. By the way, you were a young pup back then, but that's what we did back then to bring things under control. They don't have these tools now. They're not lowering tax rates. They're not doing anything that's pro-production at all. And the Fed has no constraints whatsoever on its operations. So I don't see anything in the policy mix that would cause inflation to stop if it were to ever start really in truth. I just don't see it. Now, there is one other indicator that indicates inflation is rising a little bit. If you take the 10-year bond yield and you subtract out the TIPS yield, you get the expected rate of expected inflation, and that has been rising somewhat over the recent past. So it's not as though there are no indicators of inflation, but the true ones, interest rates, gold, dollar and foreign exchanges, they haven't shown it yet, but there is some in measured prices, clearly.
I wish I were a young pup when all that was trying. That was my first big story, though, covering that whole period.
I remember that.
Carter to Ronald Reagan. I mean,
and where were you? Where
really
were you back then? I forget. You were CNN or somewhere. You were at a different station. I'm not allowed to mention.
PBS.
Sorry.
No, not PBS. That's fine.
PBS.
But you were a handsome young man then. You're a handsome man today.
Oh my
so
God.
one of us has not aged, but I remember that like yesterday. Where did that time go? But, when I tell my kids this, they just say, "Really, Dad? Really?" Art, it's always good seeing you. An iconic figure.
My great-grandkids tell me that.
Yeah, really. Yeah. All right.
Thanks, Neil.
I can't even relate some of the other stuff they tell me, Art. But thank you